Hey guys, Michelle Massio here. Thanks for checking in. Thanks for checking out my video. I want to do a quick video today just to talk about preparing for the unexpected. I woke up, today is the 14th of January, 2021, and it's Thursday. As you guys probably know, I trade each and every single day. So it's super important to um, put trades in my opinion, on a daily basis because you're bringing in income, right? So the reason why we trade stock options is we want to create a steady stream of income for ourselves. And the more we do that, the more consistent our income is. So each and every day I do that. So I'm in California usually, and at the moment. And so the market opened 6:30 California time. So yesterday morning I woke up at like 5. I meditate in the morning. I think that's always good. I turn my system on, and then I go to put a trade in at like 6:30 when the market opened, and I got this error message that I couldn't put a trade in. So I'm like, what the heck? So I call IB, Interactive Brokers, my custodian. Of course, I wait on hold for like 30 minutes, maybe even longer. It's so annoying. Um, and I talked to a guy who's like, oh, I'm not sure what's going on, blah, blah, blah. And then I wait and I wait, and then I call back later. And come to find out, recently I had withdrawn my securities registration. So I had my account and other accounts underneath my RIA firm, my investment company. And because I withdrew my registration, Interactive Brokers shut my accounts off because they were connected to a registered person who's no longer registered. Um, so I didn't even have any warning. So here's my takeaway, right? Always be prepared for the unexpected. That's super important. I'm going to say that again. Always be prepared for the unexpected. So I already had an E-Trade account from a while back. I traded with E-Trade a while back, and then I just found it confusing to have two platforms, and I was just so used to Interactive Brokers. I had been with them for a bunch of years. But I still have this account. So I'm waiting for a wire to go through now. And I'm gonna, use E-Trade right now. I did open or try to open a new account with Interactive Brokers. They take a few days. Oh my gosh, who takes a few days to open an account nowadays? It's so annoying. But my point is, always be prepared for the unexpected. So maybe have two accounts open, always have another custodian. It kind of makes me think of the whole recent Donald Trump thing, right? And I'm not going to get political at all. But I will say that my takeaway from that is the unexpected can and does happen. So it's always important to not only be, reactive, but more proactive with everything. So that's kind of my quick take. Let's just go through and quick look at a quick video anyway. I'm going to share my screen. I can't put any trades in right now. I'm waiting for a wire to go through, but I'm going to see and give you guys a good idea if I could trade. I mean, thankfully my account is up. I can close out trades, but I can't put any new trades on. I always look every time I'm opening my account. I look, where's SPY? That's the S&P 500 index. That's kind of like what's the market doing? So the market's kind of flat. It's up 0.08%. My account is up 1.7. Let's take a look and see why that is, right? So let's just scan through. Apple's down a tiny bit. Airbnb is up almost 9%. Look at some of these things are crushing it. I could sort also. Look at Tilray's up 16%. I have a position in Tilray. And I think some Bitcoin stuff is up as well. Yeah, Riot is up almost 13%. Let me give you guys a good idea as an example. Riot, you know, I've had Bitcoin for a couple of years, and I go off and on. I'm going to talk a little bit about Bitcoin briefly here. Bitcoin is fantastic. The blockchain in general is a fantastic, revolutionary idea. I think it might change the world like the internet changed the world. I'm a big believer, but it is early with Bitcoin, and I've experienced personally a couple of key takeaways. Number one, there's a lot of shadiness going around in the Bitcoin arena, right? So there's tons of mining companies that market their services that are fraudulent. As an example, number one, so you have to be careful. Number two, it's very challenging. Like stocks are easy. You open a brokerage account, you buy stock. Everybody kind of charges the same amount, maybe $1 a trade or something like that. Bitcoin is a little bit different. So Bitcoin, you can have different exchanges. They're all going to be different fees. You might pay, one fee over another, and some fees are significantly higher than you think that they, might appear. Also, I find it very confusing to keep track. Like I had Bitcoin and I had Ethereum and I had Litecoin and Ripple and some other things. And then, a lot of exchanges, you can't do multiple coins, so let's say you had 5 coins or something, you couldn't just use one platform, you had to use multiple platforms, right? Um, Not long ago, I had a bunch of Ethereum on a Trezor wallet. It's like a thumb drive, and I couldn't get the things off because they did an upgrade, or I don't know, something, update to their service, and for some reason it wasn't working for me, and there was nobody for me to call. So Bitcoin is very confusing sometimes, but you can get into the Bitcoin space in other areas, which is what I'm doing now, right? So Riot, for example, and I'm not recommending Riot necessarily because I think that they're definitely not a buy and hold for the long term, in my opinion. And always keep what I say on these videos, like trade at your own risk. Okay, don't go trade something and say, hey, Michelle told me to do this, and lose money, and then think that I owe you something. What I'm trying to do is I'm trying to just share my information, and I want everybody to be successful. So please, understand it in that way. So let me give you a good idea. The reason why I like Riot, number one, is it's Bitcoin related. And number two, it's got super high implied volatility. What does that mean? The higher the implied volatility is like swing, right? How much swing it goes up and down. And when volatility is high, your premium is higher. So think of it this way. Think of it as being an insurance company and insuring a bunch of drivers who have kind of maybe crappy prior driving histories, right? So typically, if you have a poor driving record, you have some accidents or speeding tickets or something like that, you're going to pay a higher rate, right? Because the insurance company thinks you're a higher risk. So think of it in that way. So Riot, has high implied volatility. If you're selling options on it, you're going to get paid more money because there is a lot more swing. My view is that you can minimize and limit the risk to whatever you want your risk to be. So we talked about this before. So it's important to have stops in. I truly believe this. It's easy to make money and it's much harder to not lose your money, right? So for example, let's just go through something. I can't put the trade in because I can't trade, which really sucks, by the way. But let's go through it anyway. Okay, so we always start by looking at a 52-week chart, right? So here's a 52-week chart of Riot. Obviously, it's like flat, flat, flat because, it's Bitcoin is kind of flat. And then it started taking off, right? And now it's at $27.13. Look at the volume on this thing. So 20 million shares traded, very, very active. So it's always good to trade things that have high volume. It means you can get in and out fairly easily, maybe not as much slippage, meaning that, let's say if you needed to exit the trade, you need to liquidate your position, there's lots of, people on the other side of the trade where the bid and the ask are not that wide. And if that's confusing, just ignore that. I have other videos that talk about that kind of stuff, and it's not relevant. I spoke yesterday with a person who's interested in learning how to trade options, and part of our conversation, this just reminded me of this, is that, I told her you can make it as complicated as you want. When you look at stock trading or options trading, oh my gosh, there's all these different things: earning per share, and book value, and market cap, and PE, and all these different metrics, and different moving averages, and MACD, and all these different tech indicators, tech indicators. So you could make it super confusing, but all you have to do is know a couple basic principles. You don't have to make it confusing, and you can be very successful. So let me show you Riot. So right now it's moving all the time, 2705. You can buy, as an example, you can buy 100 shares of Riot. Let me give you guys a good example. Let's see. Right now it's 2704. Now the low for today is what? It's 25.55, right? 56 if we round it. 25.56. Let me write that down. 25.56. Okay, so as an example, Riot is kind of like, obviously it's up significantly, right? It's on this upswing. You could buy 100 shares. $27 a share is $2,700. You can use margin and not have to put up the whole 2,700. You could put up a portion, It's very low risk, but you're not even risking 2,700 because you're buying it at 27. And then you're going to put a stop in. You can, as an example, put a stop in underneath today's low. So you could put as an example, buy 100 shares at 27, put a stop in at 25 and risk $2 per share. So you're risking only $200, people. So you can dictate how much you want to risk per trade. So buy 100 shares at 27.04, put a stop at 25, you're risking $200. And then guess what? We could sell a call that expires tomorrow, right? Today's Thursday, tomorrow's Friday. Fridays are amazing, January 15th. And you could sell a 27.50 call. So it's like a tiny bit higher than where you paid. And right now, it last traded at $1.10. What that means is $110, because always times 100. $110 gets dropped into your account. This is the amazing thing about options, people, that I want you guys to understand. Options and stocks are different when it comes to how you make money. When you trade stocks, if you buy, let's say, Riot stock and it zooms to the moon, you can't spend any of that money until you sell your stock. It's a paper gain, right? It's not a realized gain. When you trade options, you get the cash in your brokerage account right then and there. That's one of the reasons why, in my opinion, everybody should trade options, and you should sell options, not be a buyer. People who buy options, in my view, are suckers. I'm going to talk about that in a moment. It's just my opinion. You could take it for whatever you think. But let me move on. Okay. So $1.10. So $110 gets dropped into your account. You're risking 200. You're making $110. You have 1 day of risk. One of two things is going to happen between today and tomorrow. Riot could be higher than 27.50 or lower than 27.50. If it's higher than 27.50, you're going to sell your shares at 27.50. You paid $27. You sell them at 27.50. You make 50 cents per share. What is that? 50 cents times 100. It's not much. It's $50 plus you make the $110 that, for selling the option. You made $160 for 1 day, maybe two if you count today, tomorrow. And you only risk $200. Oh my gosh. Like, everybody should fucking trade options, period. If Riot is lower than 27.50 between today and tomorrow, and it closes lower than 27.50, your option will expire worthless. What does that mean? That means it's good. You sell a new one on Monday. You keep the $110 that you got paid. You keep your shares, and you sell another option on Monday. It's like rinse and repeat, rinse and repeat, rinse and repeat. Guess what? If Riot goes below $25, you get stopped out and you sell your shares. You lose $200. This is all about mathematics. You don't have to be a math whiz. You don't have to be a statistics whiz. You just have to understand basic principles. Okay, I'm risking $200. I'm going with the trend. The trend is my friend. Always go with the trend, right? Like, go with the momentum. Risk 200, make 160 or make 110. You're going to make the premium either way. You keep that. So you keep the premium that you get paid either way, no matter what happens to the price. And if it's lower, you sell another option next week. Everybody should be doing this. People that buy and hold for the long term, that's so fucking yesterday. That's like old school. That just doesn't work anymore. Why would you want to subject yourself to market volatility? Oh my gosh, 2007, the market dropped 50%. Why would you want, let's say if you have a 100K account, why would you want your 100K to go to 50K? Oh, it's going to come back. Yeah, maybe. But if you lose 50%, you have to make 100% to get back to even. Why do you want to subject yourself to volatility like that? No, don't do that. Take in little bits of premium at a time. And I want to say, I guarantee you, that's like a big taboo world in the investment industry. I almost promise you that if you take in little bits of premium at a time, like what I'm talking about now with Riot as an example, and you limit your risk, you will make yourself 50, 60, 100, 200% annualized return year over year. You don't need a financial advisor. Nobody's ever going to treat your money better than you do. You can learn how to do this. It's not that hard. It's a few basic things. A lot of times people say, Michelle, how long does it take to learn? 10 hours, Would you be interested in giving 10 hours of your life in order to learn something that you can use for the rest of your life to make, let's say, even if you made a fraction of what I'm talking about, let's say you made a 20% annualized return year over year over year, and you don't have to pay somebody else and you just do it yourself. And what does it take on an ongoing basis? It takes 15 minutes a day, people. Like right now, I can't put any trades in. All my stuff is protected because I have stops on everything. So for example, this doesn't take a long time. That's what I'm trying to tell you. you can have another job and you could do this on the side. So for example, I had 1,500 shares of Riot. I bought them at 22.29. I have a stop at like just shy of 20 bucks, 19.99. And then I also have contingent orders. If I was to get stopped out, if the price goes down and I get stopped out rather, I'm going to buy back my short calls. That might sound confusing if you don't have a lot of experience. I have other videos. Watch all my videos. Subscribe to this channel. I'm trying to put videos on here every day, and I just want to teach people. People think like, oh my gosh, options are aggressive or they're risky or they're this or they're that. No, you just don't understand how it works. It can be if you don't have proper things in place. So with all transparency, you know, we're in January now. This past like February, March, COVID had started, right, in 2020. The market dropped like a rock. I was short a bunch of puts. I didn't have stops, and then the market went down so quick, and a lot of things were halted. So like if the market goes down significantly, stops or stocks rather halt trading, right? So the market halts trading. It just avoids it attempts to avoid like a crash, a serious crash. So you can't get out. My point is, even if you wanted to, because the trading halts. So I was, but I learned from that experience, and I think we always learn as we go. And now I'm super, super, super like, you know, before I was like, okay, there's a very small possibility this could happen. So I wasn't as protected. Now I look at it like anything can happen. Oh my gosh, the president of the United States got his Facebook and Instagram and shut off, and he's being impeached twice, or I don't even know, like these crazy things like you would never think. Like yesterday I woke up and my account with Interactive Brokers shut off. Like it's just this administrative thing, which is not a big deal, but now I can't trade, right? So it's kind of like, you know, expect the unexpected, right? So anything can happen. So my point is, oh, where was I going? Lost my train of thought there. My point is always have protection in place. So now I could go out and for the day, and I don't care what Bitcoin does, because, you know, let's say if it dropped like a rock, I know I have a stop in here on my long stock, and then I know I have contingent orders to buy back my open calls. So you never want to be naked on a call. That's kind of an aggressive thing. So what I'm doing now, moving forward, is I am uber careful. Like I've gone through cycles where, you know, it wasn't likely, but you know, something unexpected happened and I lost a lot of money, and I've put myself in a position like, Michelle, this will never ever happen again. So expect the unexpected, right? Make small pieces of income, day by day. Keep your stops kind of tight, like only risk what you want to risk. I use spreadsheets, which are really cool, that kind of show you, I want to risk 1/4% on this or 0.5% on this. Typically, 1/4% on every position is a very good number, especially to start off with. Also, I want to throw in there, I know I wasn't timing this, but I want to throw in there that sometimes people say, well, how much do I need to get started trading options? You don't need a lot of money. I was showing somebody this Tilray trade yesterday, actually. Tilray is a weed company, marijuana. I don't smoke marijuana, but I like to trade it because you can make some money. So it's 17 bucks a share. You could buy 100 shares, 1,700. You can use margin and put up less of the money. And you could do the same thing that I was just talking about with Riot. Buy 100 shares at 17.59. Let's just look at the chart real quick, right? We're gonna go through this quickly, and then I'm gonna hop off. Maybe we put our stop at 12.50, right? As an example. So maybe we risk, you know, $5 a share, $500. Buy it at 17.60 right now. Sell an $18 call that expires tomorrow. Take in 84 bucks or 85 bucks. And it's the same scenario as Riot. If it's 18 or higher, we're going to sell our shares. We made, 40 cents per share approximately, plus the 84 bucks. Now, 84 doesn't sound like a lot of money, but for one day, this is what I was going through yesterday with this girl that I was talking to. She wanted to start an account with like 2,000 bucks. I'm like, the more the better, obviously. Then you could be more flexible and trade more things. You start an account with 2,000 bucks. You can't like trade Tesla as an example, but that's cool. You could trade Tilray, right? So you can start an account with 2,000 bucks, and let's say you make 80, or actually now it's trading at $69, right? Last trade. So let's say you make 69 bucks a week. Really, there's only one day, but let's say, oh my gosh, Michelle, like, okay, you're only going to do a fraction of what I say. Let's say you make $50 a week in income, $50 a week on a $2,000 account, right? $50 times 52 weeks. You made $2,600 on a $2,000 account. That's over 100% rate of return. So that's what I'm saying. Like when I tell people, okay, you can make over 100% annualized return, sometimes I hesitate when I say that because I don't want people to think, you're so full of shit, you're crazy, blah, blah, blah. But this is what I'm talking about. You can, and you put a stop in there. So, I mean, if it goes down and you're wrong, you risk 500, risk 200. I don't know, whatever it is that you're comfortable with. I'm telling you, everybody should trade options, selling options, not buying options. Let me tell you why I think buyers are suckers, and then I'm going to wrap up this video. Buying an option is kind of like when you buy an option, you want to like typically 10x your money, right? So you want to put up, let's say, oh my gosh, I paid $100 for an option and I want to make 1,000, and it could happen. Like I could go to the freaking mini mart and buy a lotto ticket and I can hit the jackpot. But the likelihood is smaller, right? And obviously buying options is not quite the same statistical likelihood as hitting the lotto, but it's a similar concept, right? So really you're putting up $1 to make 10. Is that likely? No, it's not likely, because why would it be likely? It's kind of like I'm going to go to the casino and I'm going to, bet on red. It's not even a 50% likelihood because you have double greens, right? It's a little bit less. The favor is always in favor of the house, always, all games. But it's kind of like, okay, I'm going to go play craps. I'm going to, or I'm going to play roulette and I'm going to bet on, I don't know, number 7 or some, I don't even know, whatever. I'm just picking things out of the air. It's not likely. So the odds that it pays are very, very high. So that's what it's like when you buy options, right? And also keep in mind, when you buy options, or if you buy options, time is your enemy. Time is never on your side, right? So you could buy, let's say, I don't know, I'm just going to use Tesla as an example. Tesla is $848 a share. Let's just say 850, or it's almost 850. You could buy an 850 call. Oh, I don't even know why this is not coming up. Okay, so you could buy an 850 call, right? Right now they're selling for $1,200. That's a lot of money. That means you have the right to buy. Let me just, I don't want to confuse anybody. Let me just stick with the basics. You can buy a call, pay $1,250, and even if Tesla shoots up, it doesn't necessarily, you're not going to make dollar for dollar on the gain. What I'm saying is this: as time goes on, the value of your option is eroding, right? Why would you want time as an enemy? You want time as your friend. If I sell options, the stock can go like this. It could kind of go up. It could even go down, and I could still make money. So when you sell options, you make money if it's going up, if it's sideways, or even if it goes down. Now, if it goes down significantly, obviously you can lose money in a trade, and you can always lose money in a trade. But what I'm saying is the statistical likelihood is in your favor. I would rather make $1 and be very likely to make $1 like 100 times than have some 100 to 1 chance that I'm going to put up $1 and make $100. You follow me, right? So I just want to take in little bits and pieces of income. I want to keep my my stops tight. I want to have a finite amount of risk, and this is what happens. And when you do that, I don't know. Today's the 14th. Let me see what my month to date return is. And I'm not even sure where the stock market is. I'd have to look that up, but this is going to show me my month to date return. Let's see. Real quick here, month to date. Okay, month to date 7%. So it's only the 14th. If you annualize that out, I can make 14% per month, right? So I mean, again, you might not do exactly that, right? That's just what it is now. It might be more or less, but if let's say you did 14% per month times 12, because that's only for a month, people, is 168%. I'm telling you, this is the way to go if you want to make money consistently and cut your losses. Become an insurance company. I'm kind of rambling now. I'm going to end this video. I hope this helped. My point of this video was expect the unexpected. And then I kind of gave some extra stuff. So anyway, cheers to all of you. Happy trading. Subscribe to this channel and hit me up with any questions. Okay. Bye.